Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Indian equities are set for a quiet start ahead of the Q1 GDP data, likely to accelerate, at least for the country, to 7.7% driven by the service sector. Talk about the GIFT Nifty indicates a flat to mildly positive start coming in for Dalal Street. US stocks advanced for fourth consecutive session due to weak economic data, which somewhat reduced the fears of the aggressive rate hike coming in by Fed. It was soft US growth along with labor market data essentially, which led to a little bit of reduced fears coming in for the rate hikes. Asian shares are set for a worst month since Feb on China gloom. Talk about the data. Manufacturing index activity for China contracted for fifth straight month in August. Two of China's biggest cities on Wednesday eased the mortgage curbs. Slew of measures coming in by China that you could see, but set for the worst month since Feb. Talk about FIIs, they've bought shares and also DII data there. In terms of the trade setup, high delivery interest, which is witnessed in Infosys, Alchem, SBI Life, and Bharti Airtel, along with Ultratech Cement, which has been featuring into the list way too often. In terms of the F&O queues, FIIs have just been the net buyers only in stock futures. They've been net sellers for index futures, index options, bank nifty futures, and also for bank nifty options. What remains in ban, F&O ban, is Indiabulls Housing Finance. What is new in the ban is BHEL on account of the sharp surge that we've seen for the counter. What comes out of the ban? Escorts, Hindustan Copper, and Manappuram Finance, along with GMR Infra. But let's get to know more about the trade setup strategy of the day and the F&O updates with Chandan Taparia, Senior Vice President, Heads Derivative and Technical Research at Motilal Oswal Financial Services. Chandan, good morning. Starting from September 4th, Bank Nifty weekly F&O contracts will expire on Wednesday. That's next week onwards. How are you looking at it and what's your strategy for Nifty and Bank Nifty today?
Good morning, Nikki. Thanks for having me.
Pleasure.
So welcome to the world of everyday expiry. So like after these changes, now we'll be having everyday expiry from 1st September onwards. Like your Monday will be mid-cap Nifty expiry, Tuesday will be Fin Nifty expiry, Wednesday your Bank Nifty expiry, Thursday Nifty expiry, and Friday Sensex expiry. And yesterday in some circular, since BSE also shifted their bank expiry to Monday. So every day is the expiry day. Now talking about the impact, I don't think there will be major impact on the market setup, but yes, participation will increase because earlier on Thursday, people either trade Nifty or Bank Nifty using certain capitals, but now they can use the same capital to use Nifty on Thursday.
Chandan, hold on to that thought. Let me come back to you and check with you the impact in just a jiffy. It's the markets open 19,350 mark, well above that level. Well, it's a flat start, but with a bit of positive bias. We were anticipating a quiet start coming in for Indian equity markets, pretty much playing onto the tune of expectation. Let's talk about the Bank Nifty index just to see how that is stacking up. It's a flat start even for Bank Nifty, holding about that 44,200 mark, but with slender losses that you can see on the screen. Let's also talk about what we have in terms of the mid-cap and the small-cap index. How are they doing? And mid-cap index, of course, was the broader indices were a record high level, new highs coming in for the broader index. And in today's session, the trend is no different for both of them, outperforming the larger counterparts. That's where the party lies and continues to be the case even for broader index. Let's talk about the sectoral indices that we have, something in the like of IT, Pharma and FMCG. IT, defensive names, has started on a good note. Let's talk about FMCG, a flat start with positive bias out there for FMCG and for Pharma too. Well, a flat start, but with negative bias. In terms of what we have for rate sensitives, auto has been holding up, 0.3% of gains coming in for the auto index. And let's also talk about realty index and the metal index. Metal outperformance, or let's just say gains coming in for yet another session, at least in opening deals. In terms of the realty index, that also has started on a positive note, but the gains seem to be limited at this point. Let's talk about the top gainers and the top losers that we have on the screen right now, just to see where the trend has been stacking up. Metal names like Hindalco is topping the list along with HCL Tech, Tata Motors, and also what we have is L&T, Apollo Hospital and Power Grid. These are some of the top gainers that we have overall on the list. In terms of the other gainers, we have Maruti Suzuki, ICICI Bank and Tech Mahindra. Talk about the top losers that we have. Market press largely in favor of advances, 32 advances as compared to 18 declines. Adani Enterprises, Adani Ports and Bharti Airtel. Some of the top losers on the screen there. Cipla, BPCL and Sun Pharma adding to the pressure for the markets. A bit of positive bias coming in for Indian equity markets. We're going to be addressing in stocks and news, but let's go back to Chandan and check with him the strategy for today along with the impact that he says about the changes on the F&O landscape overall. Chandan?
Yeah, so the market started on soft note, some positive setup, but again, mixed cues. As of now, 19,300 is likely to hold, being the monthly expiry, but upside is likely to be kept at 19,450. So 300 to 450 is the range we need to play in Nifty. Looking at the Bank Nifty index, 44,000 to 44,444 or 44,500 is the range to play. Now let's talk about selective stocks. So we have seen a recovery in certain mid-cap name. In heavyweights counter, we'll focus on BHEL, one of the strongest counter. We have seen some long activities here. We are recommending from last couple of days. The stock is making higher highs, higher lows. One can buy this stock with support of 117. It can head to us 125 kind of level. We have positive on the selective auto name. So TVS Motor is one of the preferred name. One can look at the TVS Motor, can buy with support of 1385. The stock can head to us 1480 kind of level. If someone is looking for non-F&O counter, I can talk about BSE, Bombay Stock Exchange, which looks strong with support of 950. It can head to us 1030 kind of level. So these are the couple of names, and apart from that, positive view on most of the hotel name, whether you talk about the Indian Hotel, Lemon Tree, I think these stocks are likely to do well.
Chandan, clearly BHEL has now entered into the F&O band, so it is a stock that you've recommended on a delivery basis for the viewers there. But let's also talk about what do you make out of the F&O contracts expiry. Please shed some light as to how do you look at it. Or from next week onwards, expiries for Bank Nifty will be on Wednesday. The circular for BSE Bankix has said that it's going to be on Monday starting October 16. Your assessment?
Yeah, thank you, Nickey, for highlighting the stock in F&O bin. There are a couple of stocks which are in F&O bin, like Bhel and Ibul Housing Finance. So one need to keep that in mind. Talking about Bank Nifty again, so as per the recent changes, the Bank Nifty expiry will shift from Thursday to Wednesday. So technically, there is no change as per the market setup, but its participation will increase. For an example, let's say I have 10 lakh rupees and I do some strategy on expiry day. So on Thursday, either I can use for Nifty or Bank Nifty, or I can put part in both. But now I can utilize the same money on Nifty on Thursday and same on the Bank Nifty on Wednesday. So activity will increase, participation will increase for those who understand the market well and play with some strategy kind of setup, right? So this is what I understand. And I think because of this, some sort of hedging activity or some sort of pair setup activity could be there. Like people used to do Nifty to Bank Nifty, like one can do the writing in Bank Nifty and can do the buying in Nifty. So some sort of calendar spread, one day kind of activity could be there. So some sort of more activity on strategy and trading part because of shift of Bank Nifty expiry from Thursday to Wednesday.
All right, that's the word coming in. Clearly, market is struggling to sustain a higher level, as evident from the way key indices have closed off and also have opened in the early deals. Stocks that are set to be a part of the MSCI indices are expected to be volatile as operators hand over these stocks to fund managers, mostly in the closing hours of the trade. But your strategy today for Nifty and Bank Nifty, if you could reiterate, if people, viewers watching out there should go long, or how they should treat some caution out there ahead of the GDP data, how are you looking at it?
So Nickey, there is no clear setup in Nifty from last couple of days. We are moving in a broader range. If you look at the history of last 12, 13 days, on downside, we are finding multiple support near to 19,230, 250. But at the upside, we are finding hurdle near to 19,480. So we are in a range, so both kind of trade will be there. As of now, I'll look at the two instances. First, if it takes support near to 19,300, 320, I'll go long with support of 19,250. But if it fails to hold 19,300, then I'll change my stance. So as of now, if it takes support near to 19,300, 320, then only I have some positive or range bound bias kind of setup in the market.
All right, Chandan, we're just going to leave it at that. Although I wanted to chat about Zee Entertainment because that's one counter. Your final assessment and the levels probably that we can see for Zee before I let you go.
Yeah, so Nickey, talking about Zee, right? The stock witnessed good recovery and momentum just on 10th of August. But after that, from last 13, 14 days, it got stuck in a range. So require momentum. Momentum is again fizzling out. So here I'll have the conditional trade. About 270, you have to buy with support of 262 for target of 285. So only about 270, I'll suggest to buy Zee. Otherwise, avoid and wait and watch.
All right, Chandan, thank you so much for those views. And it was good to have you around.
Thank you.
All right, that's the word coming in from Chandan. Zee Entertainment, Yes Bank and Subhash Chandra has essentially they worked out the one-time settlement for Zee Entertainment Enterprises. This is clearly one of the news that we're picking up from Hindu Business Line. But let's address the fundamental story here and bring in our guest Ambareesh Baliga, who's the independent market expert and also been around for markets for a couple of years now. To say the least about him. But let's actually, check with you your assessment of what do you make out of something like a Zee Sony case, which has been long pending. Now, finally, few of the other settlements have come in terms of Zee wanting to settle off their claims with Yes Bank and the ARC by offering in one-time settlement as an imperative or a precursor to the deal, impending deal, given the light of situation. How are you looking at it?
Good morning. I think, whatever is happening on the Zee story, I think the Zee merger with Sony, I think the path is getting clearer. And yesterday's settlement, if that's true, then I think that's extremely good for Zee Entertainment because I think, the merger will happen like earlier than now envisaged because it's already been about more than a year, close to about 15, 18 months. So I think over the next 6, 8 months, I think this merger should happen. And we should remember that Zee was, in fact, at levels of about 600 plus when they're talking of the merger. And then we had that major correction. So we could see a decent bounce back once, the dates for merger are very clear.
That's the word coming in for Zee Enterprises. Perhaps, how are you looking at the entire IT basket right now after a slew of downgrades that have come in? Are you holding a cautious bet or a view coming in for the entire space, given the kind of guidance outlook and the cues that we're seeing globally? How are you looking at it? And within that, if you prefer the space, would you prefer mid-cap bets over large caps?
No, in fact, on the IT space, I've been cautious for a while and would continue to do so possibly for a quarter more. Because looking at the management guidance, I think one needs to take a cautious view. But then at the same time, if you're looking at long term in the sense the next 2 to 3 years investment, I think you should keep your list ready and be prepared to start buying, say by November, December. I think that's when I think this sector should bottom out. And here my picks among the large caps would clearly be Infosys, TCS, and HCL Tech. And among the mid caps, I would look at something like a KPIT and a Tata Elxsi.
KPIT and Tata Elxsi. How about the shares of diagnostic companies? They've come off recent highs, but the trading volumes suggest that they're beginning to find takers at decline. So what has really changed for these players over the last 2-3 months?
No, I think this is more of a trading sort of a move because if you look at it fundamentally, with the sort of competition which has started building up, and especially for some of the biggies have also got into this space, and we are having many more listed players than what we had possibly about 3 years back. Pre-COVID. So I'm a bit worried on the margin front, and that's not going to improve anytime too soon. So I would possibly utilize any of this upside in the diagnostic space to in fact book out than buy fresh.
All right. Also something in like of BHEL, the stock has been doing extremely well. New order wins coming, perhaps enter into the F&O category.
Absolutely. So I think the latest order which they have bagged for a supercritical thermal power at Chhattisgarh, I think this is another feather in the cap for BHEL. And this was one of those underperformers for a while, except for the last, I think, 2 to 3 months, we have seen a good move in this stock. Whereas most of the other PSUs in similar space, I won't say exactly the same space, because if you look at the way the defense stocks have moved up, I mean, especially the PSU stocks, I think BHEL has some more upside from here, and especially in light of this news also. I mean, I would not be surprised if we see levels of about 140, 145 for the stock.
Ambareesh, overall, your direction for the markets, especially for mid-cap, where there is so much of skepticism around the whole index, with the index scaling new highs day after day, perhaps more of the investor community have now started beginning to, fear that whether the rally is done past with, it's overdone perhaps. How are you looking at the mid-cap space? What do you like within this space? What's your assessment?
No, I think overall the markets, one needs to be a bit cautious at this point of time. We have clearly seen that the headline index is not going anywhere. The action had shifted to the small cap and the mid caps because the liquidity is decently high. And most of the HNI and retail traders are making good profits in some of these mid cap and small caps, which have seen momentum in the last many months. But then making money in the markets has become so easy. So I don't really see this continuing for too long. Whenever you see making money in the markets is easy, I think those are those big red flags one should, in fact, take notice of. And if you look at the other factors, clearly, I think the big worry right now is going to be monsoons, because if you look at August, it's been a decently long dry spell, especially in South India. So the question is whether this will lead to food inflation, especially in an election year. And then you have the Fed rate hike, which is very much possible. And I think that will lead to a further pressure on the rupee. And I think the only good, feel-good factor which could be there would be the G20 summit. But that's only a feel-good factor. I don't think that will change anything majorly fundamentally. And also, you have those rumors of possibly an early election. I think that could also catch the markets off guard. So I think one needs to keep note of these things. And especially after you've made good money in the market, I think it's time to take, at least those profits off the table, sit on cash for a while, possibly wait for a correction, because I think that's quite overdue. And technically speaking, if the Nifty breaks that 19,200 mark, I think we can see a decently good fall.
All right, that's a bit of caution coming in. But let's also talk about the bets that you like from the broader space. Talk about that, something in the likes of BSE. Which counters are you looking at?
No, in fact, I've got some like mid-cap calls, but again, these are more of a long-term. Among the recent IPOs, when I say recent IPOs, I'm talking of the last 2 years. There's a company called Tega Industries, which is basically into minerals and mining. It's an ancillary. And we have seen that nearly 75% of the orders which they've been getting are quite, like repeat orders. Visibility is extremely good. And here I'm expecting revenue CAGR, at least over the next 3 to 4 years, of about 15 to 18% with a good EBITDA margin of 20% plus. So here, in fact, I have a target of about 12.25, which is a decent return from the current levels.
Apart from Tega, anything else?
Then, in fact, I also have another stock which anyway I've been recommending for a while, which is Viatech Wabag. Again, basically into complete range of water and wastewater treatment solutions. And a company has more than 90 patents, have done about 2,300 projects in the last three decades. So execution capability is clearly there. About 12,000 crores of orders, which is about 3x their FY24 revenue. So again, visibility is extremely good, asset-light model. And here, in fact, I have a short-term target of about 620, 625. But then if one keeps for longer term, clearly looking at the issues surrounding water and wastewater issues, I think this stock can easily give you that 18 to 20% sort of a return year on year, at least over the next 5 years.
I also wanted to talk to you about Aeroflex Industries. It's going to be listing in today. The pre-opening rate at least indicates a 66% premium as compared to the issue price at rupees 180 rupees. How are you looking at this company? Have you got a chance to eyeball the entire financial? Strong demand by the issue, a good
Look,
premium perhaps. How are you looking at?
yeah, I think, beyond talking about the premium and a good listing, I don't think I should be commenting much on this company because this is managed by a lead manager on whose board I am an independent director. So I would, refrain from commenting on this.
Oh, that becomes even more imperative for you to talk about it in terms of financials, right? In terms of the 3 years projection, in terms of how is the company looking at it since.
I think the company management should really talk about it than me as an independent director on the board of the lead manager.
All right, so really I appreciate if you could throw some more light in terms of the business visibility of the company, although we have caught up with the management and we've had a candid chat with him. In terms of the revenue trend that we've seen from 145 crore in FY21 to 23, the number has gone up to 270 crore. How
Right.
differently is the company placed? Not asking you to typically comment on it in terms of the future outlook, but in terms of the business model, how unique is it? How are you looking at it?
No, because they're in quite a few of those niche sort of products, and I suppose going ahead, defense orders could be, a decent size for this company. So I think that's something to look forward to.
Right, that's the word coming in. And Aeroflex Industry, in an interview to Moneycontrol, has targeted 4-fold revenue growth in next 5 years. That is 1,000 crore revenue that they're projecting in the next 5 years. But Ambareesh, we're going to leave it at that. Thank you so much for taking out the time and speaking to us this morning. So it's Aeroflex Industry that you need to keep an eye out on. It's going to be listed anytime soon on the index. Final issue price with around 108 per share. The listing seems to be, at least on the pre-indicative price, a 66% uptick. The premium, however, earlier was little higher. A bit of volatility has been factored in. The issue has seen huge, overwhelming response, humongous response. 350 crore public issue was garnered. It responds subscribed by as much as 97 times in the issue period. So you can only see the amount of traction building up for this one. Sula Vineyard is expected to see some block deal where World Invest Asia is looking to sell up to 12.5%. Through this, the block deal size may be to an extent of 539 crore and the range is expected to be around 473 to 508. 60-day lock-in period for this one. Let's also talk about the third stock that you need to keep an eye out on, Zee Entertainment, that I highlighted just a while back. We spoke about it in detail. Yes Bank and Subhash Chandra has worked out one-time settlement, which translates into a 75% haircut for JC Flowers ARC, which is the arm of Yes Bank. Subhash Chandra will pay in 6,500 crore of debt to the bank ARC and 1,500 to regain the ownership of family stake in the assets like Zee, Dish TV and Zee Learn. The agreement, as I indicated earlier, is imperative for Zee-Sony deal. 25% of the payment is expected to take place in 90 days. That's the word coming in for Zee Enterprise, given the current situation that it's facing with the Sony merger. But that's all that we have at this point of time. With this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen, and for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.
How do world leaders view India?
I've long believed that the relationship between the United States and India is will be one of the defining relationships of the 21st century.
The bright spot of the global economy.
The growth rate for India which is 6.8 in 2022. Let's not forget, this is one of the bright spots in the global economy right now, such a high growth rate.
The potential of India is enormous, and you have now a reformer, a radical reformer, who has the ability to transform it.
On the verge of a big transformation.
इस अमृत काल में हमारे संकल्पों की सिद्धि हमें आजादी के 100 वर्ष तक ले जाएगी.
A magnet for investment.
I'm actually incredibly excited about the future of India. I think India has more promise than any large country in the world.
The world is bullish on India. Moneycontrol is bullish on India. Join the campaign. Tweet to us with hashtag MC Bullish on India.